Been a long time since I've been able to say this, but what's up, guys? Welcome back to DCA. So, just to answer the question that probably no one was asking, where have you been over these last 5 or 6 months? And I'll just quickly put this out there and I'll tell you what's been going on, and then we'll kind of move on from there. So, as many of you know, I'm a physician, and a lot of you probably don't know that. But I had a lot of professional obligations that I had to take care of over these last 5 or 6 months, and it pretty much required my full attention. So I wasn't able to focus on making videos, unfortunately. But I'm done with that now, and it's time to move forward from there. So I want to start by just quickly talking about the market, where we're at now, and kind of what my thoughts are going forward. So I'm just going to touch on this for a minute, and then we'll get into the video. So, obviously, right now, the market's going great, right? Like we've seen the market cap just shoot up. Bitcoin hitting 100K. That is a huge, momentous event. So, at the moment, at least when you're looking at this through the lens of a regulatory perspective, this is the best scenario that we've ever had for this market. The ignominious rise and fall of Gary Gensler, quite frankly, one of the biggest risks to the crypto market. We've kind of seen everything that he was trying to do more or less fall flat on its face. We've seen the rise of the Bitcoin and Ethereum ETF. Okay, now based on the results of the election, regardless of what your thoughts are about the politicians that were elected towards the crypto market in and of itself, these were amazing results. These were the best results that you could have asked for. We have, a Congress who's going to be more or less backing the crypto market. President-elect is going to be heavily pro-crypto, based on some of his rhetoric and things that he said about, wanting to purchase Bitcoin. I mean, these things you just couldn't ask for more right now. Okay. So we're in one of the first, this is one of the first times where, it looks like any risks to the crypto market aren't going to come from the crypto market. They're going to kind of come from either something happening that would cause the stock market to crash or whatever that may be. And we're not going to live our lives trying to predict, these unpredictables, things that we just can't define or identify, right? And even if we have hunches or suspicions about things that may come to pass, there's simply it's too difficult to predict the timeline of these like macroeconomic level events. You might be looking at all these different economic data points and be saying to yourself, oh well, it's coming, this big economic collapse is right around the corner. Yeah, but right around the corner on the macroeconomic level scale, that could be 10, 15, 20 years, right? Or even longer. And then in that time, certain checks and balances can be put into place which may counteract whatever the scenario is and how it looks right now. It's really difficult to predict those high level macro cycle events, and specifically it's difficult to predict the timing of them. So we can't worry about those and say, oh, I'm not going to be involved in the crypto market because I think that at some undefined point in time we could see an economic collapse. It just doesn't make sense. If that was your thought process, you would be pretty much out of the market since 2022. Everything's looking good more or less right now. So what we're going to do today, and just because I'm, making my way back into making videos, I'm going to make this video in honor of my dad because he is a longtime holder of Cardano. And, he sent me a message the other day saying that he thinks it's going to $1.39. That was his prediction. And, he sent it back here when it was at about a buck. So he got pretty close because it looks like we got up to, a high of around about $1.30. So far he got pretty close. Not quite on the money so far, but that's his short-term prediction is we'll get to $1.39. What we're going to do in this video is take a look at Cardano. We're going to assess where we're at right now, and we're not going to try and predict where we're going to in the future. What we're going to do is something a little bit different, because if you're someone who's kind of sitting on the sidelines, or at least partially sitting on the sidelines, you may want to identify where it is that you can get back into this market. And so we're going to look at that today in order to identify where some of these support and resistance levels may form at that would allow you to get back in and kind of gauge what is the relative chance that will bounce off of that level and head back up, right? So this, I typically like to talk about more long-term investing process, but when you're in an up market, we don't want to sit here and talk about what's going to happen 4 years from now. We want to talk about how to navigate the market right now. So that's what we're going to do in this video. So if you guys are new to the channel, my name is Jay. What we do on this channel is primarily data-driven analysis of the crypto markets. There's no fluff, there's no hype, and no hopium. We just look at the data. So with that said, guys, let's do it. Okay, so what we're going to be looking at today is called the volume profile visible range. And the reason we're going to look at this metric, and we've looked at it, numerous times in the past, is because it works, right? It's a very consistent measurement of where an asset is going to form levels of support and resistance. And that's for the fact that with this metric, we are able to identify where volume has occurred at for a particular asset, and in this case, Cardano. And what does that do for us? Why is that helpful? Well, the reason it matters is because if we know where the volume is happening at, we know where traders have historically been active for that particular asset. And with that information, we are able to identify when you're going to run into a large holder block, either above or below where you're at. Now, when you run into these levels, what happens is if you're coming from below to above, so let's say we went from $1 to $2, and we were able to identify that there were a lot of holders of that asset at $2, well, what we tend to find is that people get out of the asset when you come back to their price basis, especially if they've been quite a bit down from wherever they're holding at. You bought it at $2. Let's say you bought Cardano at $2. We went all the way down here to what, about a quarter. Well, you were down a huge amount during that time. So if we just took a percentage based measurement, let's say you bought like we said, right around $2. Down at the bottom, you were down nearly 90%. Okay. And when you come back up to $2, a lot of people are just like, I put in, let's say you put in $1,000, you were down all the way to about $100. So when you get back up to your $1,000 investment you made, a lot of people will get out. And because of that, we tend to find that that will then be a resistance zone. So with this particular metric that we're using, we are able to accurately identify those zones. And, I've illustrated many times in the past, you can go through and historically look at this and you can identify that, you don't even need to look at just like the current data. This metric will update, show you, whatever point in time you're looking at. And that's helpful because then you can kind of back test the metric. You can see, well, did it work? Did this $1.25 level? So we're looking right here in, 2022. You can see that there is a large amount of volume that occurred right at this $1.25 level. Okay. So the farther out these horizontal bars over here come, that means more volume occurred at that level. So the more shallow the bars are, so these smaller bars, that means very little volume occurred at those levels. So we would predict then, just based back here in 2022, that there are a large number of holders here at this $1.25 level. Is that going to be a resistance zone? Based on this metric, I would say it is. And does that pan out? Let's find out. And as it turns out, yes, it is a resistance zone, because if if we just looked here, let's take the $1.25 level. If you just look here, that is where we've kind of bumped into the wall, right at that $1.25 level. Now, it doesn't mean that there is a massive level of resistance there. It just means that that particular level has seen a lot of volume traded. All right. So going forward into the future, we would expect that that $1.25 level would turn out to be a resistance zone. So we're going to break it down like this then. We're going to look at where the support and resistance is at, starting back in 2021. Okay. So we're going to look at all the price action that has occurred since 2021, and we're going to see where we're at now, where we could go forward, and where we'll bump into resistance, or kind of how the market may proceed if we're breaking above this level. But more importantly, I want to look below us, and I want to identify where are some potential entry points where you could get into the market, or where might we catch support at if the market starts heading down. Because I think a lot of people at this point, probably have some money on the sidelines and they're interested in identifying where they can get into different assets at. So that's what we're going to do in this video. Okay, so as I said, we have the distribution of volume over here on the right. And you can see that we have particular areas where the bar is significantly larger than at other areas, okay? So right here, where we're at this $1.15 to about $1.35 zone, you could have known that it's very likely we were going to run into a wall at this level because of the fact that if you go back historically, a lot of volume was traded right in this zone. And using the exact same process that I described earlier, these people that kind of bought right in this zone, they were down about 80%. Okay. If they, bought back there and held. So there was a point where if you were buying in at, $1.20 or whatever, and then we went down to 25 cents, you were down about 80%. Okay. So when we came back up to this $1.25 level, that was a prime zone for the market to kind of run into resistance at. And that has panned out exactly like that. Now, just because you hit into one of these resistance zones doesn't mean that you're going to get stuck there, at least for any significant amount of time. The crypto market, we all know how it is. You can just blow through resistance zones, and we see it all the time. Okay, we saw it with with Bitcoin recently, kind of blowing right through those top levels without a problem. And once you break through those levels, especially once you get into price discovery levels, the price can just take off. So this metric doesn't do anything for us once we're getting into new all-time high zones. This metric is most useful for identifying kind of the path to the all-time high, right? We know that we're at a resistance level right now. Let's start by looking at what's above us because it's an easier story to tell. So when you're at these high levels, right, like $1.20, okay, and then the next one above us wouldn't be all the way up here until about, right in this $2.25 zone, right? In between that zone, there's very overall little resistance, especially once you kind of break above that $1.50 level. So between the $1.50 and $2 zone, if we get into that level, I think what you'll see is the price will very quickly rise up towards these prior all-time high levels. We may find a little sticking point here at around $2.15. But I think the path between $1.50 and $2 is going to be smooth sailing because there's very little overhead resistance. Now, how do we know that's true? Well, you can see that it just happened, right? You can see a perfect example of that. Notice where we were at down here. We were down here at this 35-cent zone. There was a huge amount of volume traded in that level, right? Like anywhere from around 25 cents up to around 45 cents. When you break above that level, especially on positive news, an overall positive market like we just had, if you get anything good, in terms of news, in terms of hype, in terms of hopium for the market, you bust through these areas here. And these are called low volume nodes. So we go from this high area to this low area. When you're moving into these areas, you gain momentum potential and you shoot right through them. And that's why as soon as we broke above, this 45-cent level, we just saw the price rocket from, we went from around 35 cents all the way up to where we had our peak at, right around $1.30. Okay. So what do we have below us then? Right? Because as we're coming from a high level to a low level, the same kind of phenomenon exists. We see that when we're moving from these higher to lower levels, we can potentially shoot down very quickly. And that's why we get these massive price moves in the crypto market. The distribution of investment levels tends to be very extreme. There tends to be certain areas that have a large number of holders, and then others where almost no one is holding the asset. And that's why this market turns so hot and so cold very quickly. People are either, think crypto is the most interesting thing that's ever happened before, or they hate it and don't want to hear about it. And I think anyone who's been involved in this market for quite some time now is well acquainted with that. What we can do then is say, well, what's below us? All right. And we have this very high volume level right where we're sitting at. So a key level where we want to see ourselves break above is kind of this $1.35 level. There's still quite a bit of resistance all the way up until you get to around $1.45 or so. But once you get into this $1.50 to $2 zone, there's not much there. We don't start to catch resistance again until about $2. Below us, we have quite a bit of resistance, or support rather, here at $1.05 to $1.15. You can see that right here. There's this big chunk of holders right here who were buying kind of these dips, buying these dips back here in 2021, buying these dips, or what they thought was a dip in 2021, but actually turned out to be that was the start of the correction. Then we have a bit of a gap right here between about $1.05 and down to around 95 cents. That's a very small price range, you know, in terms of the crypto market, 10%. Then we have another pretty big zone here, right at around the dollar, all the way down to maybe around 80 cents. How could you use this then? Well, if we saw a dip down to a dollar, you know, $1.05, $1.15, that may be a good place where we would expect to see a bounce at. And that's what we saw, you know, this week. We saw that when we went down to around $1.05, we hit a big bounce there because we were in a support zone, because holders will tend to either buy or acquire more when you're coming from above down to their investment level. It's the exact opposite phenomena that we see when we're coming from down up to their investment level. Then again, we have this nice support level here at right around, you know, 90 cents, okay? Now below that, if we dropped below 80 cents, then you're not looking at any serious support back until you get to around 75 cents down to around 60 cents, okay? Below that, we're not even going to spend time right now, you know, focusing on it because I don't think it matters that much, right? Everything looks positive for the crypto market. So for the time being, while we're sitting here at $1.20, we're not going to worry about worst case scenarios and this and that. If that starts to play out, then we can, you know, start to look at these levels. For the time being, what it looks like right now is where we're at is a pretty significant level. If we can get above this, and really if we can get above about this $1.50 level, you're going to see the market, I have a feeling, quickly shoot up towards this prior all-time high, right? Around $3.20. But it's going to take, you know, some more good positive momentum for the market, because we are at a pretty significant resistance zone right here. But then it just, you can see it just trails off. And, you know, you can kind of tell if you look back here, back to 2021, that's what we saw happen. Right when we broke above that $1.50 level, look what happened, guys. We went straight up to 215. Now below us, if you're looking to find an entry point for Cardano specifically, we're looking at about $1.10. We lose that, then you're looking at around anywhere between 95 cents down to around 85 cents. So that at least gives you a framework for navigating this particular asset in a shorter term context. I think that, you know, you want to be patient right now, but you also want to be looking for key spots to get into different assets in case we do take off. Now, you know, you guys know how it is. We can never say never, and we don't want to pretend like, oh, the market can't go down from here, because it can. It can go down at any time. And I said there's no like significant intrinsic risk for the crypto market. There's always intrinsic risk. It's just, you know, things that we may not necessarily know about. Like if some other big type of scandal broke out, or, you know, who knows what could happen. It's the crypto market. It's the Wild West. It really is. So there's any number of things that could drive the market down, but we can't predict those, and we're not going to sit here and worry about them. So we're going to identify our potential places where we can get into this market and use that information to navigate these markets successfully. So that's going to be it for this one, guys. I'm glad to be back. I'm glad to talk to you guys all again. And until next time, as usual, see you.